From CNBC, Dow futures fall nearly 600 points as Credit Suisse slide adds to financial sector woes. That's right, ladies and gentlemen. They predicted Credit Suisse would be the next bank to fall, and this is a big one. In fact, this is so shocking, European markets are roiling, and Credit Suisse dropped, I think, around 20 points pre-market. You've got the breaking banner on CNBC.com. Oh boy. I don't know what this means. I don't know if it means the apocalypse is here. I don't know if it means the big banking collapse is finally upon us, but we are seeing stocks slide. The European markets are being hit. Trading is being halted, and you do you guys. I'm seeing a lot of people on Twitter be like, you know, there's a meme saying not pulling your money out of a bank to prevent the banking collapse, pulling your money out of the bank intentionally to trigger the global banking collapse. And I have to wonder about it. A lot of people have absolutely been advocating for taking all of your money out of your bank as quickly as possible for the the express purpose of causing the machine to collapse. That's one way to do it. Sounds a bit too Antifa to me. I don't want the system to implode and break. I want it to be slowly reformed over time so that it can be fixed. But therein lies the big question. Can any of this be fixed? I don't know. And when you take a look at what's going on in Silicon Valley Bank, they're coming out right now saying it's the safest place to have your money because the government has insured all deposits with no limits. Now, how is that possible? I love when COVID happens. They're like, let's quadruple the money supply overnight. Here's what happens. You increase the money supply. You're giving out money. You're converting savings to checking, things like that. Money supply increase means that people will be able to buy things and there will be a demand for goods because people have money. But it also means that increasing the money supply, there's no supply side. There's limited supply, hyperinflation. And that's what we may be seeing right now. I think all of this goes back to 2008, as most people do, where they put a Band-Aid on a bullet wound and, oh boy, here we go. CNBC reports stock futures fell on Wednesday as pressure on the financial sector increased with shares of Credit Suisse, a Swiss bank that has large U.S. and global operations, tumbling more than 25%. Woo! Oh, baby. I think on this news, I'm going to go to the bank and start transferring, spreading out. I'm just going to do my thing. Yeah, I don't want to. Look, man. A lot of people are going to say it's irresponsible to go on big shows and say the collapse is coming because that'll cause a run on the banks. And it's like, yeah, there's a video right now. I think it was Jerome Powell. They're asking why did they target interest rates at 2%? And he's like, if people expect 2%, then it actually happens. And he's not wrong, but it's funny because people are like, okay, this confirms that the whole regulatory system is one big psyop. And it kind of is. The idea is if people are told inflation will get really bad at a top-down level, they will start acting as such. They'll say, better increase prices, better lay people off, increase our savings. And so what you need to do, or what they say you need to do, is tell everybody everything's going to be fine. Just keep spending money and doing things like normal, and there will be no problems. The question is, though, can they control the wave of human emotion in these circumstances? And as such, my question poised to all of you yesterday is, if you see a large mob of people screaming, run in the banks, do you think you'll be able to convince them not to? I don't think any of the world leaders, top-level politicians, or financial sector individuals, I'm willing to bet, I will tell you this right now, you turn on these talk shows, you turn on these podcasts, and many of them are going to be like, no, everything's going to be fine. The reason why is X, Y, Z, A, B, C, everything's going to be fine. And then as soon as they're done saying that, they're calling their finance people, their accountants, they're calling their significant others and saying, get the money out now. And the reason for that likely is they're coming to you and saying, hey, everybody, just calm down. Quick, get the money. Just calm down. You wait. They get their money out. You show up. Money's all gone. I'm not saying I know for sure it's going to happen. And they're going to yell at me being like, by saying that you're encouraging it to happen. I'm not encouraging anything. I am saying right now that we are watching in the news the second and third largest bank collapse in U.S. history over a weekend, over the span of only a couple days. And then you get some rich dude coming out being like, Credit Suisse is the next to fall. It's done. And then you've got other people saying the bond market is failing and predicting collapse. And then sure enough, a day goes by, breaking news, Credit Suisse has no money. Look at this from Reuters. Credit Suisse sheds nearly 25%. Key backer says no more money. Oh, well, gee. So let me tell you, running the banks is bad. But if a run of the banks is inevitable, then what you're going to get from the media is them saying everything they think you need to hear to slog you up while they run in and take theirs and leave you holding an empty bag. So I don't know what you should do. I'm not giving any financial advice. I got no idea. I'll tell you what I'm going to do. I am not going to sit back and just beg, everything's going to be fine. As I often say, I'm a guy who reads the news all day, every day, nonstop. It's kind of horrifying. And then I thought to myself one day, why am I not buying stocks? Like, if I'm watching this story and I'm making the mistake of assuming people know it's happening, they don't. A lot of people get their news from me. I go to arcades or bowling alleys, pool halls. We go out to parks. Regular people who are outside touching grass don't know what's going on. So they're not making these kinds of investments. And then even to that extent, there are people who are online commentators who are a week behind some of these bigger stories. So I thought to myself, if I really am in the forefront of seeing all this news happen, I should just buy stock, because I'm going to see news. I'm going to be like, okay, that's a good reason why the stock is going to go up or down. Then I can be like, I can buy it. So here's my point. I'm watching this happen in real time. For those of you that are watching this video, how many people do you know pay attention to videos like mine? Here's what you can do. Go to timcast.com, click that join us button, become a member, support our work directly, share this video for two reasons. The first is, if you like the work we do and you think these videos are important, we are principally funded by memberships at timcast.com. I do these videos. They're free. There's ads on them. The ads don't cover the bills for the operation. It is only because we have members that this company exists. That's the first reason. The second reason is the people you care about, maybe sharing this information may make their lives better. Not that my opinions will. I don't know. Maybe my opinions are just gutter garbage and you like watching the show because I tend to be more balanced and I try to be honest. Maybe you agree with my opinions, but sharing the video, becoming a member helps everything we do here, and it may inform more people you know and care about. But anyway, here's the point. My question to you is, how many people do you know actually know what's going on with the banks? Like, serious question. If you comment, let me know. Like, tell me, if you go to a friend or family member right now and say, did you hear about the three banks that collapsed? Silvergate, Silicon Valley Bank, and Signature, and the fourth bank that might likely collapse that people are predicting that just triggered a massive drop-off and trading halt. Ask them if they know. And you know what many of them are going to say? First, many will say, no, I didn't hear about this. Some are going to be like, oh, I can't think about this stuff. It's too depressing for me. I love that. You're like sitting around the campfire and you come running up and you're like, listen, I've got bad news. There's a giant bear coming. And I don't want to hear about it. It's so depressing. Okay, well, I'll pack up my stuff. I'll grab my bow and arrow, get on my horse, and GTFO. Think about how insane that is. Modern problems, okay? The idea that you could come to a group of people and say, a tsunami is fast approaching, and they go, blah, blah, blah. I don't want to hear it. Stop talking. Fine. Noah tried to get the message out. Remember that? And they were like, you're crazy, Noah. Why are you building an ark? Now, whether or not you believe in that story or not isn't the point. The point is, it's literally a story about a guy who's like, there's going to be a giant flood. It's going to kill everybody. I'm going to load up a bunch of animals. And they went, you're crazy. And then a giant flood came and killed everybody. And he was on a boat and he was fine. The moral of this story, whether you believe it or not, is, prepare for disasters and pay attention to what's going on in the world around you. Because right now, Reuters reports this. Zurich, March 15th. Credit Suisse lost almost a quarter of its value on Wednesday, dropping to a new record low after its largest investor said it could not provide the Swiss bank with more financial assistance. Quote, we cannot, because we would go above 10%. It's a regulatory issue. Really? The Saudi lender acquired a stake of almost 10% last year, taking part in Credit Suisse's capital raising and committed to investing up to 1.5 billion Swiss francs. Broader equity markets fell sharply, reversing earlier gains, blah, blah, blah. Speaking at a Morgan Stanley conference, blah, 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 blah. European banks battered, reports Reuters. Here we go. Several European banking stocks halted from trade after steep losses. There's a really great video. Juice News, Rap News, number 9, I think. Old video from 10 years ago talking about the financial collapse. It's got jokes about Ron Paul in it and stuff. Really old video. Talking about the oikonomia, the Greek term meaning household management, which is where we derive the word economy from. Anyway, it's interesting to think about that 10 years ago, we were talking about all of this. We were experiencing the aftermath of the global banking collapse. And now it appears wave 2 is upon us. There's a meme where someone's like, it's Back to the Future. And it's Marty going like, oh, economic collapse. I've seen this one before. And the kid goes, how have you seen it before? It's new. It's like, well, you know. It was millennials and Gen Z. Like millennials are like, oh, the second large collapse we're going to live through. Well, every decade or so, there's a market correction. It's all predictable. If you're paying attention, you make money off this. And it's kind of a strange thing, to be completely honest, that you can actually look at the market and just be like, it's that easy. In fact, there are a lot of people who are rich because they have robots just do the trading for them. The algorithm tracks trends, makes the buying and the selling, and then your money just goes up. It's remarkable to me that there are a lot of people who, well, I suppose this is the way the system works. If you want to be rich, you be rich. I know it's not as easy as just saying that, but for a lot of people, they just set up a program and then they click a button and then let it do the trading automatically for them. It's kind of crazy. But the computers understand the market trends better than the average person. And so often, I'd imagine it's the human trying to catch up with machines who are probably getting hit. It's not absolutely like that, but you know. So I decided to pull up our good friend, the NASDAQ Banking Index, because 2 days ago it was minus 10%. Then yesterday it was plus 10%. And currently right now, as I'm recording this, it's closed at plus 1.95. Well, we can see there's still a lot of drop off. Weirdly, it's not, I can't get it to, it's a lot of red. I couldn't get it to filter by gains or by drops, by falling stocks. But we can see that some of those that were doing well yesterday are no longer doing well. And though it is up, you can see it's still, here we go, over at the indices. It dropped pretty substantially. Now, my friends, Bitcoin, doing pretty good. And a lot of people think this is an effort to usher in a central bank digital currency. I'm not entirely sure that's the case, but Bitcoin may very well be the digital gold, as everyone has predicted. So I'll put it this way. I'm not giving anybody financial advice. I am going to likely go to the bank later and start transferring some funds and spreading things out and preparing for the worst. And that's probably bad news, because if everybody goes and does that, then the machine probably breaks. And if everyone just stays home, the machine's probably fine. The problem is I don't speak to the world, and the world is likely having a panic attack over what's going on. That is to say, if every single person in media came on TV and said, run for the hills, the system would implode in 2 seconds. For me, I really don't think that the amount of people who watch a video like this is going to have that big of an impact. And I don't know what you should do because I'm not a financial advisor. And for all I know, your financial situation is very, 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 very different from mine. But I'm not going to sit around and wait to figure it out. I am going to pay attention to what's going on and try and protect myself. Check this out. Charlie Bilello, chief market strategist at Creative Planning, says Silicon Valley Bank is now marketing themselves as the single safest place to keep or transfer your deposits, fully insured with no limits or caps. That's right. Please join us for a call with Tim to learn about our strategy and path ahead. Why there is not a single safer place to keep or transfer your deposits than SVB, fully insured with no limits or caps. An update on business continuity, along with an ask from our clients and community. That's right. The government is backstopping the millionaires and the billionaires. Now, I get it. If a business fails, then, I'll put it this way. I asked this on Timcast IRL. Timcast.com has a lot of money in the bank, more than the FDIC insures. But it's not like that money is just, you can just take the money and then go buy the world's biggest cheeseburger. The money is operating expenses, and it comes and goes quickly. A bunch of money comes in and then it gets drained for labor. Money coming in is sporadic. Money going out is fairly consistent. We have payroll. We know when those costs are going to hit. So it goes up a little bit, goes down a little bit less, goes up a little bit. That's how, profit works. If our bank were to shut down, our employees would not get paid. And that is economic catastrophe. That's why Silicon Valley Bank is facing a serious, the crisis is going to have, that's why the crisis at Silicon Valley Bank is very, very bad for everybody. And that's why they're saying it's a contagion. What happens is Silicon Valley Bank collapses. A whole bunch of companies that pay their employees all of a sudden can't. Etsy sellers aren't getting paid. This means they're not buying cheeseburgers themselves, and the local burger shop then goes out of business because it has no customers. That's why the government wants to come in and backstop. My attitude is Elmo fire emoji. Enough. The system can't function this way. And now what's happened is the FDIC has said, we will backstop regardless of caps. We will bail out the millionaires and the billionaires and all these companies that aren't whose deposits aren't insured properly. Granted, I do think the FDIC insurance needs to cover greater than $250K because of inflation, so it needs to update this. But now they're telling every bank, don't worry about it. We are going to just pump money into the system until the system can't take nothing no more. And the end result, it's fairly obvious. The whole thing will likely just blow up in all of our faces because you can't do this. We're going to get hyperinflation. Your milk is going to cost $20. Your eggs are going to cost $20. And you're going to walk up one day. Like I tell you, during the pandemic, we saw this. You'd go to Amazon, you'd click the link for a laptop or a tablet, and you could probably do this now still. And then don't buy it just yet. Put it in your shopping cart and leave. Come back a week later and see what Amazon says. It's going to go, there was a price increase on a product in your shopping cart. Oh, take a look at this. Who killed Silicon Valley Bank? This one is triggering a lot of people. And I think I'm going to keep hammering this point in all these segments. Here's what the Wall Street Journal opinion section writes. Was there regulatory failure? Perhaps. Silicon Valley Bank was regulated like a bank, but looked more like a money market fund. Then there's this. In its proxy statement, SVB notes that besides 91% of their board being independent and 45% women, they also have one black, one LGBTQ plus, and 2 veterans. I'm not saying 12 white men would have avoided this mess, but the company may have been distracted by diversity demands. May have been. They didn't have a chief risk assessment officer. They didn't have someone checking into whether or not the things they were doing would cause an implosion. Apparently they did before. The person was either let go or left, and then they never replaced it. But they were oh so concerned about making sure everybody knows that one of their board members bangs dudes. Great, I guess. That's the thing that's important. You sit down in an investor meeting with a bank and you say, you've got billions of people's money tied up in the bank. And if they can't get access to that, the whole financial system could implode. Tell me, what are you doing to make sure the system doesn't implode? And the guy goes, well, one of our board members has sex with men. And you're sitting there like, what? What? I don't care. Go home and do whatever you want. Just tell me that my money. All right, man. So I got to wonder about all of these ESG companies. The people point out that Tesla has a low ESG rating. And okay, I guess. I'm glad I bought Tesla stock. Because me personally, I ain't going to be buying any stocks in any company with a high ESG rating. Maybe that's the scam. They create environmental social governance, then tell everybody, don't you want to invest in saving the world and equality? I'm sorry, I don't say equality, I say equity. And then all the dumb people are like, I think it's a good idea to invest in a company that believes more in diversity and not in meritocracy. And then smart people who like money are like, I'd rather invest in a business that care about selling a product and functioning properly. Because I'm pretty sure the color of a person's skin doesn't matter if you're selling widgets. Unless the widget is like skin tone cream or something like that. I don't know. The point is, if you come to me and tell me that your plan for the future is to hire a black or gay or female board member, That is the single stupidest investment a person could make, in my opinion, not financial advice. Obviously, there are some woke companies that make a lot of money. I think Disney's like making money or something. No, I think actually they're all laying people off, right? Ladies and gentlemen, welcome to the climax. The ultimate get woke, go broke. Right this way, my friends, as diversity plans in big businesses in the financial sector will result in total global financial ruin. But rest assured, from the ashes of the old, we shall build anew and usher in an age of central bank digital currencies. Perhaps that is ultimately where all of this leads to. But in the short term, I'm not so convinced you need to worry about any of that, because tomorrow you may be wondering why you can't fill up your gas tank, why there's no milk, bread, or eggs at the grocery store, and why it is your bank has told you no more withdrawals. I went to my bank a few months ago and we needed to transfer money and they said no. And I can't remember exactly what it was. We needed cash. And I said, we need to do a cash thing. And they said, there's a hard limit unless you place an advanced order. And I was like, what do you mean an advanced order? The bank doesn't have cash? Nope. They didn't. It's all numbers in a computer. So I have to wonder, when you can't take your money out, do you start worrying? Well, I'm worrying now. I've got employees, I've got bills, I've got debt, things have to be paid off. We've got a lot that we need money for. And if at any point the banks freeze up and we can't get access to our funds, then it all comes crashing down overnight. But of course, maybe the FDIC will step in and stop it all from happening. And then what we'll get is not central bank digital currencies, but absolute command economy. Think of it this way. If the FDIC can step in and say, we no longer care about limits, everything's insured, then the federal government is basically intervening and saying, we will own and control the entirety of the economy in every facet, not just a little bit, the whole thing. Maybe that's how you get communism. Chinese style communism. Oh boy. I'll leave it there. Next segment's coming up at 1 p.m. on this channel. Thanks for hanging out, and I'll see you all then.